Gold has seen a gap down opening today and is now trading with a slight bearish bias below 1920 levels. So now what to expect from gold today? Can we expect it to continue trading bearish or is it going to bounce back? And if yes, which position you should take and at what levels such that you can trade profitably? We will see with the help of charts and indicators. If you find the content valuable, please press the like button, do comment and share and subscribe as well. The second, also press the bell icon which keeps you updated. The second update will be released before the US session. Thus, press the bell icon or join my free Telegram channel to get the live updates. The links are mentioned in the channel and video description. Let's see. Firstly, you will find the divergence of the price from the 20 period exponential moving average. It is trying to converge towards the 20 period moving average, which is right now sitting at around 1914, 1910 zone. This is going to be a great support zone, and this is also an achievable level here. Thus, below 1980, we can initiate a selling position, expect 1914.15 as the first support levels, and then 1910.08 at the next support levels. This zone is going to remain critical for gold. This will decide the direction for the day. In fact, it can completely erase the gains from the last trading session. There is a probability to it, but I still will refrain from staying bearish as long this zone here at 1880 1870 is respected. This is going to be the zone which is going to be decisive. Only below 1870 gold is to be treated bearish, else it has the probability to bounce back. Now if you look at the moving averages have started to flatten up, a convergence on the downside should be seen and observed so that the bearishness may prevail beyond that. See, stochastic has come to oversold levels with just couple of red candles here, while MACD has also crossed over and trading with divergence and looking downwards. Remember, this crossover in MACD is coming with the backdrop of a strong rally, and this is divergent, and hence we can expect it to continue with the slight bearish bias. RSI was oversold, and that is what it is trying to come out of the overbought zone. Not oversold, but overbought. Coming to 2 hour, likewise on the 2 hour chart, the divergence from the 20 period, it is trying to converge, and yes, it can converge. We have always seen whenever there is a divergence from the 20 period, it always tries to converge. Right now, the 20 period is sitting at around 1904, 1900 zone. Also, if you look at the stochastic has fallen vertically, it has come to near to oversold levels, while MACD, which was trading with extremely fat belly here, it is trying to converge. It can possibly cross over. Now, if you look at the waves here, rise, retracement, then rise. So possibly a little retracement can be expected. Thus, below 1918, we can expect 1914-15 at least, which should be first support levels, then 1908-10, and then 1900-1904 zone is going to be the maximum support for the day. RSI was overbought. It is trying to come out of the overbought zone. Coming to 3 hour chart, similar observation on the 3 hour charts. But if you observe here, see the red candles are smaller in size compared to what the bullishness we had seen. And hence, if it is bullish, what it may try to do, it will trade with slight bearish candles. It will wait for the moving average to come up somewhere here at around 1910, 1908 levels. It may try to consolidate, and then a rally from those levels again can be expected. Now, remember, on the upside, a buying entry is only if you see 1926.5. Beyond 1926.5, you can again initiate a buying entry. We can expect it to hit first 1930-32 zone, very good resistance, and then 1936, 1940 will come into picture. Any move beyond 1940, just stay long. We are looking at 1950, 54 zone as the next target, and beyond that the bulls will completely take over. Though I see possibility of a little retracement before the rise is what we can expect. In fact, it can continue on the downside from here. That is also one of the probabilities. See, moving averages crossing over here, 50 and 100. This is a bullish sign. And this is the zone which will decide the direction of gold, 1880, 1870 levels, below which certainly the bears will take over. And this is applicable for this complete week. Stochastic dropping from the overbought zone, MACD was bullish. It is trying to converge a bit. It is trying to cross over for sell. Yes, it is trading with extreme divergence, and that is why we can see red candles here. RSI coming out of overbought levels, it has just dropped vertically. It can continue on the downside. Thus, fewer red candles, fewer bearishness from here can be expected. Likewise, on the 4-hour chart, see lower highs, lower lows. Thus, once you see the price is staying below 1818 levels, we can say 1918 levels we can sell, but then 1914-15, first we should watch out. Below 1914-15 is where we can see a further bearishness. and then we will not be thinking of buying there. We can possibly expect a retracement to continue towards uh, possibly 1904, 1900 levels are even possible here. And in fact, the faster the rise, the faster the drop is what we expect. But this time, if the drop is slower, possibly it can wait for the moving average to come up, consolidate here somewhere around 1900, 1905, 1910 zone, and then bounce back from those levels. This is one of the probabilities which can be expected. Stochastic overbought, trying to cool down a bit. MACD is still bullish. It is trading in green and it has lot much of scope. Though if you look at it has come and extreme overbought levels, you can see -20 to +20. This journey is completed. A possibility of a reversal still exists here. RSI is still overbought and trying to come out of the overbought zone. Coming to now, look at the daily chart. See, there is a gap here. Lower highs, lower lows. I will wait for 1818 levels to be breached. Below that, uh, probably more bearishness can pull the prices down. If you look at the daily chart, see what has happened here. If you look at, see, lower highs here and lower lows, this is an expanding triangle, and if the prices continue to retrace from, there is a probability for gold to achieve the lows as well. As of now, we are not going to treat gold as bearish as long as 1870, 1880 levels are respected. As long as these levels are respected, we can expect that there could be a possibility to bounce back. And beyond 1940 and 1950, this is the zone beyond which we can say that it is giving a breakout. Gold is giving a breakout and it is going to stay bullish from those levels. I will still expect it to trade with a slight bearish bias. Daily stochastic overbought. Look at MACD. See, MACD has seen extreme divergence here. See the candle size here. Thus, from today onwards, possibly a couple of red candles and fewer red candles from today can make it converge and then trade with slight bearish bias. Even if it is bullish, it has to converge. RSI trying to look downwards from here. Thus, looking at this scenario for the day. Now, before I provide you the trading levels in strategy, if you want to learn the art of trading, you can join my mentorship batch. 26 batch is starting today. Enroll yourself now itself. Reach out to me for more details. See, equip yourself with the tools, techniques, and strategy which can help you identify profitable trades and trade profitably. Reach out to me for more details regarding the course. My Telegram and email IDs are mentioned in the channel and video description. Also, if you think that I am adding value to your trading decisions, do like, share, subscribe, and comment. And join my free Telegram channel or press the bell icon for live updates. Now, see, today I will recommend you to buy at 1926.5. Yes, that is the level beyond which we can expect 1930 will be achieved. And then it will, see, 3032 definitely a greater resistance than 1936 and 1940. Once these three levels are breached, it is directly going to stop at 1950, 54 levels, the next resistance, and beyond that, the bulls will completely take over. I do not see this happening today at least. Possibility exists with the of gold to trade with a slight bearish bias today. On the downside, I will recommend you to sell at 1918, but then be careful of 1914, 15 as the first resistance, 198, 10. Then the next strongest resistance for the day is towards 1900, 1904. Below that, the bears might take over and you have to trade with caution. Trade accordingly, trade profitably. Stay tuned with the next update before the US session. Thank you very much. Have a great profitable trading day ahead. Thank you.